Looking at the outlook for 2025, we expect the economy to be in a recovery trend, consumer demand to be also accelerating. So if you look at the fixed income segment, we are looking at about a 1% to 1.5% increase in rates. In terms of the stock market, we expect with the low interest rate regime for stock returns to be higher. First Capital's brand leadership is mainly dependent on its research and its accuracy. If you look at the last 3 to 4 years, we've significantly improved on our accuracy levels, benefiting the investment community as a whole. We make our investments or the research reports available for the public. Looking at the outlook for 2025, we expect the economy to be in a recovery trend and accelerating towards the middle of the year. So with it, we expect consumer demand to be also accelerating. So if you look at the fixed income segment, we expect interest rates to have bottomed out during the first quarter and then gradually increase towards the second quarter to the fourth quarter. So we are looking at about a 1% to 1.5% increase in rates. So interest rates overall during 2025 is likely to be on a low interest rate regime. In terms of the equity market, that is the stock market, we expect with the low interest rate regime for stock returns to be higher. Especially the first quarter, we think the bullish sentiment in the stock market is likely to prevail. And thereon, we think things are likely to slightly slow down. However, since the interest rates are low, the stock returns are likely to continue to be positive during the second to fourth quarter as well. In the investment landscape, in terms of the portfolios, we think, let's start off with the fixed income segment. We think investors should shorten their portfolio durations because since it's a rising interest rate environment, as the maturities come sooner, you would be benefiting out of the rising interest rates. Then, on the other hand, if you look at the equity outlook, we think investors should be fully invested in this environment, and we expect the ASPI fair value to be around the 16,500 to 17,500 mark. And since the ASPI is already within that range, it might benefit the investors if they can switch their portfolios into the second tier or the mid cap counters where they can gain a higher return in their portfolios. So that would be the main strategy that investors need to adopt in terms of opportunities. In terms of risks, there are local risks and global risks. On the local risk side, we know that there's a lot being done by the central bank and the government to boost consumer demand. On one side, we saw in November the cut in interest rates. Then we see the government doing a lot in order to, in terms of reducing pay taxes, then reducing electricity tariffs, then increasing assessment program payments, pension payments. Some of these are potential expectations coming over the next few months. So with this, what happens is there could be a overheating in the economy by consumer demand running beyond our expectations. So that is a significant risk because it could impact higher interest rates. On the global side, there could be certain uncertainties that come from the Middle East segment where it could affect commodity prices. So any escalation in crude oil prices would directly impact Sri Lanka, and that could again lead to higher energy prices and also increase in overall interest rates. So it's a significant deterrent for investors as well. First Capital's brand leadership is mainly dependent on its research and its accuracy. So, First Capital invests heavily in research, mainly to acquire talent and also for research tools. So, with this, we expect to gradually increase the accuracy levels. If you look at the last 3 to 4 years, we've significantly improved on our accuracy levels, benefiting the investment community as a whole. Now, what happens with that? The investors are likely to increase their wealth with the level of accuracy that we put out. We make our investments or the research reports available for the public. So, through our website and WhatsApp channels, you can view our research reports. Secondly, we conduct research forums and also webinars. Through this, the investors can enhance their knowledge and increase the financial literacy overall.